We're going to Madison Reedy for a business chat. There's a bit of angst around KiwiSaver providers. It's been described as a Wild West. Why is that?
A Wild West was the term that came from Sam Stubbs, who is the managing director of Simplicity, which is this kind of low-cost, no-frills KiwiSaver provider. Now, he took it upon himself to do some research of his competitors, as this industry typically always does. You know, they're always keeping tabs on each other. So
I was going to say, how objective is it?
Exactly, and I did ask that question, and I have a response about that a little bit later as well. Good. So what he did was he went onto these KiwiSaver savings calculators that are these online calculators on all of the providers' websites, and he pretended to be a 20-year-old male who earns a $40,000 salary, contributing 3% a year. And he said, "What will you save me by the time I retire at 65? And one would expect that most KiwiSaver providers would be pretty much all about the same with that same sample KiwiSaver person. But what he actually found was some major variances. So Simplicity said for that person they could save them $460,000. Other providers had estimates around $1.3 million.
Wow.
And he actually took this to the Financial Markets Authority, who are investigating it under some fair dealing provisions, because he obviously said this is a bit of a Wild West. He actually said it beggars belief. He said this is some snake oil type stuff.
What do they say?
The Financial Markets Authority didn't actually say all too much. They just said we are investigating, and once they're investigating, you know, closed doors, we can't ask too much.
And the other providers, did you get in touch with them?
I did. So I spoke to Milford Asset Management today, and they said that they were one of the higher end estimates towards that kind of 1.3 million. They said that's just because they make better investments, that they're looking offshore, they have a good team, and they're pretty confident with that. Some others have said that, you know, some industry-wide discussions on this would be good to reduce the large differences in variances, because obviously it doesn't look very good. But yeah, I mean, there is a little bit of discussion out there about that at the moment.
Okay, we'll stay tuned to that. Now, you've walked in here, for those who aren't watching, with a big report and you've slammed it down on the table. It's from the Commerce Commission and it's looking into telecommunications companies. What's it all about?
So I've looked through all 71 pages, so you do not have to.
Good.
Pretty interesting. So the Commerce Commission, which is the competition watchdog, has been undergoing this study of the telecommunications industry, which is your mobile market providers, since last year. Today they dropped on my desk a big issues paper, so that's online, anyone can go and read it. They looked at the current competition and also future competition with the likes of 5G being rolled out soon. What they found was that bundle packaging of calls and data, which is becoming really prevalent at the moment, it's what most people want. They found it to be pretty expensive in New Zealand, and in one case that it was actually 55% more expensive than our friends across the ditch in Australia. Wow. So they just want the industry to explain why. A bit of a please explain notice.
Sure. Quick wrap of the markets.
The week actually closed down 0.25%, but again that's after a wild week with that outage, I think, on Wednesday. So that was down 27 points to 9,313. New Zealand dollars buying at 66.5 US cents, 91.6 Australian and 51 British pence.
Thank you very much. Madison Reedy, informative as ever with the business roundup for the evening.